Welcome to the presentation of the subprime mortgage crisis. Are we heading to the next global financial crisis? Let's look at exactly how the subprime mortgage crisis of 2008 occurred and its impact to the global. So, what we will share today, a brief history of subprime mortgage crisis 2008, effect of the subprime mortgage crisis. A brief history of subprime mortgage crisis. From the year 2001 until 2006, is the build-out stage and is followed by the bubble burst on the 2007 until 2008. And the global crisis occurred on the 2008 until 2010. And from the 2010 until 2017, it has long-term impact to the global. Firstly, the build-out stage. It starts from 2001 until 2006. The easy money as the low interest rate and loose lending standard, such as borrower with low credit score or insufficient income, can easily borrow the mortgage loans. The expand on home ownership opportunity bar lowered overall locality. And next, the housing boom is caused by the easy credit and optimized by the United States. The housing price skyrocketed across the United States. Lastly, the securitizations mortgages were bundled into complex financial instruments, especially mortgage-backed security (MBS), and sold to the investor worldwide. In the year of 2007 until 2008, the bubbles burst. The interest rate hiked, and FED aimed to keep the inflations and increase the interest rate in the 2006. It led to the mortgage payment increase and unaffordable to the borrowers, and it led to the default and foreclosures. The borrowers are unable to keep up with the payments and default the mortgage. It triggered a wave of foreclosures and future depressing the housing price. And it also led to the contagions. MBS values plummeted and financial institutions suffer massive losses. It triggered domino effect as the bank tightening credit and disrupt spreads. It followed by the global crisis in the year of 2009 until 2010. The government interventions. Government worldwide implemented massive buyout and stimulus package. It to prevent complete meltdown and stabilize the financial systems. However, it left taxpayers with trillions of dollars in debt. And for example, the collapse of big company, which is Lehman Brothers collapsed in September in the year of 2008 because Lehman Brothers are heavily invested in the MBS, and its collapse shocked the global market and sparking panic and near collapse of the financial system. The subprime mortgage crisis have the long-term impact from the 2011 until 2017. Is the Great Recession and trigger to the worst economic downturn since the Great Depressions. Millions of the people are losing their jobs and home, and it took years for the global economy to recover fully. And the regulatory are reformed. Stricter regulations were implemented on lending practice, securitizations, and financial institutions. The Dodd-Frank Wall Street Reform and Consumer Protect Act remains a significant legislative outcome. However, inequality are spread disproportionately affect the low-income community and minorities, and exacerbating existing wealth disparity.
So now I will take charge in explaining the effect of the subprime mortgage crisis. So the first one will be the rise of the slump. So subprime mortgage crisis which trigger an increase or surge in home foreclosures, leaving once prosperous suburban neighborhoods in desolation. This financial upheaval, coupled with the factors like the immigration, workforce changes, and a population spike, actually intensified the impact and at the same time transforming the peaceful suburban into the troubled slumbers. So the second effect will be the higher unemployment or higher unemployment rate. So as business collapse and the settles rate for the financial repercussion, job opportunity decrease, amplifying the challenge faced by the individual and families across the nation. So meanwhile, the higher unemployment also contributed some of the serious negative impact to the nation. This negative impact including the slower economic growth, reduced productivity, and a less dynamic labor market. And at the same time, it also compound the harsh rate experienced by the communities nationwide. So of course, the third effect will be the tighter credit lah. So stricter credit condition had replaced the era of easy access to the credit and repair home loans approval. So in the pre-crisis economy, nearly everyone could secure a credit card or mortgage approval. However, in the aftermath of the economic downturns, even individuals previously considered well-qualified borrowers now encounter difficulties in obtaining approval. So that's all for the part of the effect of the some price mortgage crisis. Thank you.
Thank you for watching the video.